Here we go. It's Friday, Chris. You know what time it is?
It is. It is. It's time to chat about counting. Let's do it. Welcome to everyone to On the Rocks, the show where we talk about accounting and accounting adjacent stuff, mostly as it relates to e-commerce, but not only. I am Chris Gino, and I'm here with my co-host. That's Jay Kimmelman. Last week, we talked about the value and excitement that comes from attending conferences. With it being conference season, I'm hopeful that I can run into you at one of the ones I attend this year. This week, we're getting back to the true nuts and bolts of accounting. In fact, we're really getting into accounting with a deep dive on what you'd expect to see in an e-commerce entity's financial statements. My personal love for financial statements goes deep, so I'm pretty stoked to talk about this and to go through that. But before we get to that, Jay, it's been an active week. What happened this week? Last night, our two presidential candidates hashed it out, embarrassed themselves, and all kinds of other goodies. But one of the things that we've talked about and that we've kind of expected is that we might get a little extra information around their tax platforms and tax policies. Did we learn anything? I was trying to do some research. I didn't watch the debate, but I was trying to do some research to see if we really talked about it much.
We learned that 45 still wants to get that 10% tariff in place. Yeah, and he said that, let the foreign governments pay the government the tax. And then the question came up, well, won't that impact inflation? You're going to probably raise all the prices at least 10%. So he's like, no, that won't impact it. So, that didn't go over well. And then Joe, 46, basically said, we need to get the rate up from 8% to 20% on the 1%. And that will actually make a huge dent into the deficits. So we'll see what happens. But, he makes a point there. But, we need a well-rounded tax plan for everybody. And, nothing was said about fixing the IRS or helping the American taxpayer, which, I told you there was a tax advocate report that was released to Congress last week. Thank you, Brian Streak, for pointing that out. But, there's some stat that account management, LOS, or level of service, reached 88%. But it's a staggering number, and it's incorrect because only 31% of all calls made it through to a rep.
Oh, no, yeah.
And they were listing call times of 2 to 10 minutes, and I could vouch for you, that number is not accurate. So, the IRS is spouting off some stats. The advocate's trying to make some corrections to it to make sure things are getting handled, and the stats that they did provide were accurate to a point, but they weren't completely accurate. They all had spin on them, if you know what I mean. So,
of course.
So we shall see where that goes.
Yeah, we will. And I will say I did notice that, or I found a Twitter feed, and I'm sorry that I don't know who it was from, or so I could point everybody to it. Maybe I need to go back and find it. But there was someone out there, some great soul. Thank you, great soul, whoever you are, that did actually go summarize kind of the two presidential candidates, the platforms as it comes to tax. And so there actually is a good summary that exists. And again, it's not very valuable for me to not tell you where to go look for it. So maybe I'll find it after the show here, and we can drop it in the notes or something like that. But I think what you'll find is that 45, like you said there, Jay, he's looking to roll back to he's looking to keep everything that was in place, maybe even decrease some of the corporate tax rates even further still, and offset that with, like you were talking about, with tariffs. It sounds like he may not really quite understand how tariffs work. since I don't know that the tariff would be on the other government as much it would be on the entity that was shipping goods. Um,
Right.
and I think obviously I doubt that it would. I think even one of the things that he may have floated was the idea of just replacing the income tax with tariffs altogether,
Mm-hmm.
which I think everybody can pretty comfortably say, I mean, that sounds great, but it would never work. Um, and so,
Sure.
and so with that being thought about and considered and everything else, like he just wants to go back to the way it was, maybe even make it better for business owners and particularly the wealthy. Um, the opposite side of that, of course, is like the current president wants to increase some of those things, and certainly, like you were talking about, Jay, focus on increasing that on the wealthy. One thing that I did notice as I was reading, like I said, I didn't watch the debate, but I did read lots and lots and lots of news about it. 45, former President Trump, he did get fact checked a lot because on these future things because he told a lot of lies. But one mistruth that came up in my research, and particularly around tax, related to Joe Biden, was actually that that some of the higher earners actually do pay a little bit more tax than we're giving them credit for. That number had come from a 2021 study, and it may slightly distort the rates that the extremely wealthy do pay. Personally, I mean, I think I think that there's no question that with regardless of what those numbers actually are, um, Joe Biden would prefer to tax the wealthy even more. So regardless of whether it's going from 8% to 20 or 20 to 35, like I don't know that it really makes much difference. It's an increase either way.
Yeah.
As it comes to like political related stuff, the Supreme Court was busy yet again issuing opinions that probably have significant impacts to
It's mind spinning how many
to accountants.
reports they're putting out right now.
Yeah,
At the
it's
end of
right
their
at the
term.
end of their it's the
Yeah.
end of their term, right? And so they're trying to get through all the ones that they listened to and that they had conversations about. One of the ones that I wanted to highlight here today was that they made a decision in a case related to the SEC. And in that case, what the output of that is that rather than being able to levy penalties and fines and all of those types of things on people who perpetrate fraud, the SEC can't do that on their own anymore. Now that individual who has committed that crime, rather than just being penalized by the SEC directly, the Supreme Court ruled that they need to go through a jury trial. I personally think that this is maybe a really, really bad decision. And the reason that I feel that way is because there's two different things that are going to happen. The first one is that people are going to commit more fraud. And the second one is that fraud enforcement is going to be limited. Or it's going to be challenged because it's now that enforcement mechanism is going to be significantly more expensive than it was before. And so chasing down these opportunities to penalize people who have cheated is going to be harder to do. And so it is, I think that has a big impact on investors. It has a significant impact on accountants because now that burden of making sure people are doing the right thing is maybe going to shift a little. And so not a big fan of that ruling. Just personally, whether or not that's the right thing to do or not, or the judicial thing to do, I guess is a different matter altogether, and probably not a topic for this conversation. But it was one where I don't like where that's going to head, at least from my perspective. Another one that I think might end up being challenging, and this one particularly for tax professionals, is the Supreme Court's decision on Chevron. This decision basically says that when there are ambiguous statutes, the ruling entity, so the government agency that issued the statute, it's not the one that can enforce it. It needs to be enforced and evaluated by judges. And what that means I think from a practical perspective, is if there's tax code where there's uncertainty, rather than there being like a pretty standard, like here we're going to treat it this way, you're going to be able to find it treated one way in one jurisdiction where a judge says this is how we're going to treat it, and then in a separate way you may find a completely different ruling and a completely different output because somebody has interpreted the ambiguous statute in a slightly different way. And and Jay, I'm super curious on your. I know this ruling came down, I think, this morning.
Yeah,
so,
I've not heard this yet. So
yeah, so I think that this will be a thing that we want to revisit next week, or maybe even once we've had a little bit more time to digest it. But my guess is that we're going to have some interpretations, and particularly the tax-related interpretations, where maybe there's a bunch of weird and wackiness that goes on. So
the interpretations that come out of the IRS legal office will no longer hold weight. It has to go through a judge.
I think that's the way that I understood the ruling.
Wow,
now that's
there's
not
so
IRS,
many.
That's
Yeah, go ahead.
yeah. Well, it's not IRS specific, right? So this wasn't directly related to the IRS. It was related to some other government agency, but in the theory of it, it would apply to any government agency. And so I think that there may be some excitement as it comes to how that gets implemented in actuality. Because I think, and again, it's one or two articles, right? I read the article on the Journal of Accountancy, right? It said Chevron opinion, maybe some tax issues, and so we'll find out a little bit more as we have some more time to digest what people actually interpret the different opinions as. But I do think that there is the potential for a pretty significant impact to tax professionals, particularly related to this particular decision because of that.
Right.
As we learn more about that, of course, Jay, we'll talk about it some more and do some extra interpretation and all of that. Also in the news this week, or like you mentioned, the Tax Advocate report. It came out. Was there anything that came from that you wanted to highlight or that you wanted to bring up to?
I just really wanted to highlight the fact that we have all these American taxpayers with issues, and only 31% of the phone calls can get through and get answered. Really? So, I mean, we need to support the IRS and make sure that they get the funding to put the customer support reps and agents on the phones to make sure that we are getting everything dealt with and dealt with timely and cleanly. I think I talked last week or the week before about a tax advocate case that I've been involved with where we filed a 1045, which was a COVID era loss, to carry it back, and it got denied. It got pushed off, and the tax advocate said we need to file an amendment. Well, they worked it out through the IRS. They submitted it. And the same day I got the letter from the tax advocate that they submitted it, got the denial of all the claims because they were not timely filed.
Oh, no.
So, here we go. And it's just, it's a vicious circle at this point. And it's only been going on since 2020 at this point. So, it's really difficult to get all that done. And I don't know why Callie is barking right now.
No worries.
Crazy dog.
Yeah. So once we move past the political sphere, right, out of the courts, out of the presidential debates, out of the executive branch of the IRS, right, there was some other news or some other things that I think are worth talking about. And the first one is that is AI, right? We've talked about it. We brought it up now, like, I don't know, probably this. I think I was doing the counting, Jay. I think this is our 20th episode today, and so I think we've talked about AI for 20 episodes in a row. That's probably my guess.
AI and taxes, 20 episodes.
That's right. 20 on taxes, 20 on AI. It's in there everywhere. In this particular case, in the research that I was doing around accounting-related news, both Accounting Today and the Journal of Accountancy both had articles issued this week outlining specific uses and AI use cases for accountants. And so I actually thought that was really relevant that these two big pillars of institution, I guess, in the accounting space, we're both summarizing ways you can use AI in your practice. Um, and so I think it's like really important to like we talked about last week, right? Like some of the ways that AI is being implemented are challenging and run into problems, but some of them are going to be extremely effective in making your job easier. And so understanding the reasons or the points of why these things, how you can use them, what you can do to use them, why they make your practice work better, like understanding all of that is going to remain important. And and so be thoughtful of that, and do some effort, right? Take some effort, make some effort to understand how these different tools can help you. And so go read those articles out on Accounting Today, the Journal of Accountancy. They're right on their main news pages, right? Of here's some tips and tricks, right? AI tips and tricks, right? Go do that. Know that it's not going away. In in less in a little bit of I don't know, it's maybe like throwbacks to older technology. Jay, you let me know that there's been some data security issues that
Yes.
instead of being talked about for 20 episodes, data security has been being talked about for like 20 years, probably maybe 30 or 40 now.
Yep.
But you want to talk more about that? What happened? What's going on with data security?
Yeah, so there's a software that is used by 15,000 auto dealerships.
Whoa.
It's their entire financial platform where they do all their titles or their financing agreements, all of that.
Yeah.
It has been hit by a cyber attack, and it happened on the 19th. So it happened a week ago
Yeah,
Wednesday.
it's almost 10 days. Yeah.
They're expecting it
28.
to at least go through the 30th. And it's possible it might even extend past there. So we're looking at almost, have 15 days. And, the car industry is like 16% of the retail GDP. So it has a huge impact on the economy. And so right now, car dealers are writing deals on paper and with paper and pen. And it's taking forever to get this done. And car buyers are frustrated that they can't walk in and walk out with a car in a couple of hours at this point. So, again, it had something to do with a hacker, and they're being held. It's being held for ransomware, and they're trying to figure out, do they just rebuild it or do they pay it? So, 15,000 car dealerships.
Yeah,
they want access to the software. Yeah.
I wonder when you start to think about that, right? Like, how does that impact the rest of the economy?
Yeah.
When you're talking about that substantial of a portion of GDP or whatnot, right? Like 2 weeks worth of sales limitations is a pretty substantial portion, right? And it's just a reminder, like even an area that's that big has data security issues. So make sure you're not the next one by being really thoughtful about that. By understanding what it means to be exposed to that, and by understanding how you can avoid it, what your first and second and third steps are if you do run into a problem like this, and also just generally being protected, because the cyber attacks, they happen all the time. I think I heard, and we may have talked about this one a couple weeks ago. I think it was United Healthcare. Somebody had if it's United Healthcare, if it wasn't them, I'm sorry to slander their name. But somebody had some big data breach, and I'm pretty sure it was them. But there were, like, it touches a lot of different aspects of our lives, and so it is a really important thing. Absolutely.
Yeah. Well, the thing about this whole thing is, I want to know what was the breach, and if you go back a couple of years, I'm not going to name the vendor,
PDF.
huh?
Somebody clicked on the UPS PDF.
All right. I'm not gonna name names, but a tax software provider had a breach on one of their admin PCs in their office. Well, they had to shut down the online tax software because apparently they're on the same network, which it shouldn't be. So they were afraid there was going to be a spread there, so they shut everything down. So, I'm really curious to hear how this happened.
Yeah, I think data security issues like that are always fascinating about where it started from, what the where you got the skull and crossbones message the first time, like all of that stuff. Is always a really fun story. Not a fun story is whatever is going on in the Gulf of Mexico right now.
Yes.
Jay.
Well, actually, it hasn't made the Gulf of Mexico yet. So just this is a image from the National Hurricane Center, and this is the 7-day graphical interpretation. And you can see there is something in the Gulf. There was something last week in the Gulf, and it dropped a crap ton of rain over Mexico. Now, when you look at this looks like it's mid-August. And the problem that we are going through right now, Chris, is the ocean, the temperature is at mid-August levels. The temperatures are way too high. Yeah, it's 2 months from now, exactly. And ordinarily, when we see this, and basically that what you're seeing there in red is Invest 95. The one in yellow is way behind it. That isn't an Invest yet, but it's actually going to be following the exact path of the one in red, which should become named any day now. That's got a 100% chance of developing into a tropical storm in the next 2 and 7 days. But I will tell you, this has slowed it down because this originally, the 7 days, was almost to the DR and Haiti, but it has slowed down a bunch, so it's going to intensify. Now,
well, that's what I was about to ask. Is slowing down a good thing or a bad thing?
It's a bad thing. And now we look at the models, and this here gives us the trajectory. And most of these storms, we don't want them to go over Haiti, Dominican Republic, or Cuba, but it does slow them down and diminishes them. If you look at this model, it's going to go right through there and head right towards Mexico. And the thing that we need to keep in mind when we're looking at things like this, I've often let's go that way. Here we go. I've often said we get to Labor Day and storms make that hook back to Florida. Until Labor Day or late August, they go towards the western side of the Gulf. And hoping this just keeps going straight out and hopefully goes across non-populated Mexico and it doesn't impact anybody else. But it's looking really strong and really busy. And we've not seen this in June at all. I mean, we've seen some storms, but this is going to be an unprecedented year. And I'll be stocking up on some supplies very soon here.
So let's talk about that from an accounting and e-commerce perspective.
Yeah.
Right? Like, obviously, we've talked a lot about how previously how supply chain getting disrupted has a huge impact on e-commerce in a lot of different ways.
Mm-hmm.
What we haven't talked about that in the sense of hurricanes so much. We've talked about it in the sense of bridges and terrorist attacks in the Red Sea and having to go around the one cape whose name I can't remember, at the bottom of Africa.
Yeah, Cape Horn.
Cape Horn, yes, right, the one I couldn't remember. So we talked about it in that sense. What kinds of things what kinds of impacts do hurricanes have to just e-commerce generally, and especially if the season ends up really active? What do we as advisors and what do e-commerce business owners what do they need to be thoughtful about right now?
Well, one thing to be thinking about is where are your warehouses? Where are you shipping your products out of? Mm-hmm. Anything in that Gulf area or up in Florida and in the Southeast could be suspect if there is a storm that hits. And power outages, which means you can't get fuel into trucks. That's always a big one.
Right.
I'm thinking from aspects of the e-commerce side. I would think that most warehouses would have backup generators, but it's the people working in those warehouses, they, if the areas are devastated, they're going to have to move away from their homes. They're going to be impacted. I could tell you, 2004, we had 3 hurricanes come through Central Florida in 6 weeks. And some people had just gotten their power back from the first one when that third one went through and knocked their power out again.
Yeah.
And, people were having trouble just showering and getting access to hot water. And so it impacts you from a human aspect. And then when you look at it from, a business standpoint, it's like, they might not have the resources to actually operate. So, I'm possibly making more out of it. But as the weather is changing, and yes, we have warming, global warming taking place.
Right.
I mean, the seas are at 90 degrees already in some places. It's crazy. And,
what are they normally, Jay?
It's in the 70s and 80s. And
my word, that's a significant change.
Yeah.
Good heavens.
And
and
as it's getting worse, the impacts are going to get worse. And then we're going to see impacts to insurance and other costs rising, cost of power going up because infrastructure gets impacted. So things along those lines. So dealing with this is important. And I've said it on here before. I've said it many times. I am a weather nerd. I love severe weather and storms. And I tend to geek out on this stuff. And the last couple storms we've had here in Florida, I've been in Denver or in Arizona. And I haven't been here. So,
here's hoping that you don't have to be there through one, at least for a while.
I'm hoping. I am so hoping.
Let's hope these ones, like you said, carry on through unpopulated Mexico.
For
make the rainforests great again, or whatever. Let's do that instead. For sure. For sure. The last thing that we talk about, that we bring up every week, but that we know. Actually, I'm just going to stop talking about it because I know there's nothing. So this will be the last one for a while. I think I'm going to delete it from the agenda every time. Yeah. Jay, can you shock me and tell me there were tax updates this week, or are we right where we've been with?
I can shock you and tell you there have been no tax updates this week.
No, none.
Yes,
how could this be?
Yes.
Who could have expected that to be the case? All right, I'm cutting that one off. I'm not asking about it again until November, and then we can worry about it then.
There you go.
All right. Before we get to our general discussion, Jay, what are you drinking?
I have water today. Yeah, we're going out right after we end this. So
what? Like, are we talking like Mexican food, margs, or are you gonna?
Abby wants pizza, so it'll be Italian.
Wine.
Yeah. I don't drink wine myself. My wife probably will. She could do a cocktail. But
there you go. So what kind of? So educate me. What kind of cocktail is the right cocktail for a pizza?
I mean, for me, it's always a bourbon type drink for me. I mean,
it doesn't matter. Bourbon just goes with everything.
Yeah,
that seems fair.
Now, my wife, on the other hand, just real quick, she'll order something. Says, I don't care what it is, as long as it doesn't taste like alcohol. So
I have a friend that's that way.
So false idol, huh?
False idol. I can't even read the name at the bottom. Dagnarok. That's kind of funny. Dagnarok.
Yeah. Nice.
Yeah, like Ragnarok, like a Thor thing. This is a New England style IPA from North Richland Hills. So right down the road. That North Richland Hills is here in the Metroplex. False Idol is a local. Didn't know that. Great. Glad I had it. If I finish the False Idol, we're going to Comprende, which is a Mexican style lager.
Nice.
So we'll see how that goes. That's from Turning Point, which that one I'm pretty sure is here in the DFW area as well. Although
it's funny. I was talking to somebody this morning, and he said he sat down, poured himself a large cocktail last night to watch the debate, And he had it finished in 15 minutes, and he's like, "Yeah, I'm done."
Yeah, it's always a good joke to do the drinking games around the debates.
Yeah.
But last night it kind of didn't really matter what your drinking game was. You would have
No.
had an adventure.
Oh, for sure.
So hopefully people weren't too into the drinking games, or at least had a little bit of foresight to maybe not go too far. All right,
sure.
so false idol for now, Comprende for later. Comprende brewed in Bedford. That's also here in the Metroplex. So I did find it on the can there eventually. So I got two locals today. Now, to the main discussion points. Let's talk about some financial statements. And so we mean that in the, let's really get into it, since financial statements are the core output of accounting, right? So when you're doing accounting, when you're doing all of the bookkeeping, the thing that you're producing in the end is some kind of financial statement. And so today, that's exactly what we want to do. We want to talk about in a very detailed manner. What are these? What are these financial statements? How can we know what they are? What do they mean? What's the information that we should be looking for? Let's deep dive. And so, Jay has presented here for us a set of financial statements. This one you can see is in Excel, our good to go Excel, and as a user of the Xero product, I know with 100% certainty that this is a Xero export. Jay, is this a regular report that's just available in Xero regularly?
Yeah, this is the standard P&L that I ran for a year and added 2 additional periods. So it's a 3-year comparative P&L.
Yeah. And so what the like we talked about before, what the income statement provides for you is a summary of your current period activities. And so like Jay mentioned, he's run this for the period of a year. So that's January 1 to December 31st for the year 2023. And then he's included also 2 years of comparative data. That's 2022 and 2021. And that puts everything here together side by side. Now, an interesting thing that looks to be happening to this particular company, it's maybe the opposite of what a lot of e-commerce entities are feeling right now. This company in 2021, their column D, you can see they had about 10 million in sales. In 2022, they also had about 10 million, a little bit under, but they needed a few extra discounts to make that happen. And then in 2023, man, things really got spotty. Maybe their products were the ones that were on those boats in the Red Sea. Maybe there was some other issue related to their products, but they've had a significant sales downturn. But one of the things that you'll find is that sales sit here right at the top of the income statement. And so when you're looking at financial statements, that's people talk about this as the top line, right? What's top line revenue? That's it right there. It's at the very top, right? And so it's the first thing that you see when you look at the P&L. There are important things that you need to consider when you're also looking at the P&L and at that income statement line and that income line, and that's highlighted here really, really well in what is row 9, which is the discounts. And so you can see that, or actually it's returns. I'm sorry, it's not discounts, it's returns. And so you can see that those product returns, what they are doing is reducing the total sales. Total income amount, that row 12. And the reason why that's the case is that if somebody sends your product back to you, well, then you can't really count it as a sale. It doesn't work that way, right? They didn't want it after all. They send it back to you. And so you need to reduce your sales for that. That's pretty irregular. And you can also see that either shipping costs have changed substantially or this particular entity's average order value has just dropped off the map. Because you can see that their shipping income, that's row 11, has been pretty consistent across this 3-year period. 180, 200, 190, that's pretty regular, right? About the same. But interestingly, it's the same even though overall sales volume is so much lower. Jay, do you? I know this is a fake entity. You maybe even made the numbers up. Is there something that can explain what happened here, or is this just a random chance of numberage?
No, in reality, shipping rates did go up in 2023.
Yeah.
And as fuel has been going up and down, it started
Yeah.
going up from inflation. So
Sure.
the cost of shipping actually rose.
Yeah, and so what you can find is that if you're building that through, you should see the same type of thing, right? If you're this makes that evaluation of whether you're offering free shipping so critical. Because if you're offering free shipping, that's great. Your customers are going to love that, like we talked about a couple weeks ago. That's really going to incentivize them to potentially buy from you. However, that may just get more and more and more expensive for you because now you're going to have all these additional costs related to the shipping. While I was talking about sales and the sales lines, right? Jay was doing a calculation, and you can see it there on road 21. What the calculation that Jay was doing was a margin calculation, and this is very, very interesting because the company, despite their decrease in sales, they've seen a consistent increase in their margin, which truly is fantastic, right? What that means is that it sounds like this company maybe has focused more on selling and producing their better margin products. Like they've tried to make their business better. They've been focusing on improving their overall margins because these areas here, this cost of sales, this is these are the costs associated with your inventory. So your purchases for resale in this case, like that's the inventory that you bought, and the cost that it took to sell your product, your merchant account fees, right? That's the cost you pay to Shopify or
Yep.
Stripe or whoever it might be that's associated with your account to help you to facilitate your sales. And so identifying and being able to increase this margin percentage, because a lot of the things that are below that are going to be relatively fixed or you're going to have a lot of control over. But getting this particular line right and improving it gives you a lot of ability to really, really improve your overall business performance. And so it's interesting to see that this particular company had significant margin increases. And so again, when it comes to margin, the two biggest inputs, they're really the only inputs, are your sales and your cost of sales. And those cost of sales again are that relief of inventory. How much the stuff that you bought that you're selling to your customers, how much it cost, and how much
Now,
it costs.
Chris,
Yeah,
I know we're not really getting into detail here, but looking at those margin numbers, 30 to 37%, and that's your gross profit. You still have all your operating expenses. Don't you think those are kind of small and low?
yeah. What I would say is that 30%, 37% is still really low, and
See, I'm
especially
thinking the cost of sales should be 37%, but in this
yeah, it'd
case,
be a
it
lot.
is not.
Yeah, right. It'd be a lot better if it were that
Yeah,
way, right? Where
yeah.
where the opposite way. Now,
So my first
I guess.
takeaway would be they need to do a pricing exercise to look at the pricing of
Well,
their
and
products and the sourcing
so
of their
Jay,
products.
one thing that I'd love to, yeah, that is true. Your 30%, a 30% gross margin is just not going to. It's not going to give you a lot of flexibility with all of these other costs, but because you can see here, there are lots of them, right? We have wages and
Hmm.
salaries. Like that's going to be a large cost for anybody who's managing a team. So if you have your own warehouse and you're managing your warehouse, or if you have back office staff, like all of those people are going to be wages and salaries, right? And postage and delivery, you can see that there on row 48. Like those costs are going to be costs that you're going to have. Like you can't just get away from them.
Hmm.
Uh, you can't make them disappear. And so because of that, like you need those other margins to be as high as they can be so that you can be profitable as a business. Like that's really important. And you can see Zero's reporting here has output the operating expenses in their alphabetical order, which is nice when you know exactly what you're looking for. Jay, when you're doing reporting in Zero, do you have the flexibility to move this around?
Yeah, you could use the layout editor and put these in any which order you wish. You can group them together. There's a lot of flexibility in Zero to make that look how you want to.
Yeah, and so you can see, obviously this one is a canned report from Zero, so it's a basic reporting. But if you wanted to include payroll tax expense and the wages and anything else that was maybe all related to like employee benefits and employment costs, like all of those types of things that all are associated with your people, like you could lump them all together as people costs. And you could do the same with a variety of different other categories here, so that you could reduce what your income statement looks like. There are some other critical information before you scroll down, Jay. There's some other critical information here, right? One of the most critical things for an e-commerce entity is how your advertising works. And so you can see advertising and promotion is here, and we spent like 200 grand, like for a couple years, but we spent a significant amount less in 2023, and so. It is possible that there's some correlation in that decrease in spend and the decrease in sales volume. But that ROAS, this is how you'd calculate it. You would take your total sales and you would divide it by this advertising and promotion expense. Now, one of the interesting things about this particular company is I think if you did that, you'd see their ROAS was really, 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 really high. And so one of the things that's interesting about this, right? So you can see their ROAS is like 4,000 or 5,000. One of the things that this company may want to do in their financials is to split out where those expenses are going. So who are they advertising with, and what are the sales that are coming back from that advertising directly? Because that may give them a much better insight and much better quality of review of their financial information, so that they can see that ROAS much more clearly. And Jay, how easy is that to do in Zero?
Oh, it's really simple. So you can do it in a number of different ways. As easy as setting up a separate chart of account for advertising on Amazon, advertising on Facebook, Instagram,
Right.
AdWords, Google Ads, and
Yeah.
then the other side of that, you want to separate the sales into the sales channels. So what are your sales from Amazon, what are your sales from Shopify, what are your sales from your wholesale channels.
Yeah,
that way you can compare this actual sales for that ad spend and get a ROAS for each of the different expense types. And you could do that through, again, different account numbers or accounts, or you can create tracking categories and analyze sales with a tracking category of Amazon, Shopify, Walmart, etc. And that way you have the sales channels and the systems to calculate your ROAS on a specific basis, not just general.
Right. Yeah, and the good thing about being able to do that means that you have the ability to number one, see trends a lot better. And then number two, like to be able to make a meaningful change timely. And so like anything, like we talk about, like that's getting financial information is so important. And the reason why it's important is because it gives you the ability to make impactful decisions. And so that's one thing that I would advise this company to do is let's look at our ROAS and our sales volume a lot more granularly, so that we can see what's performing well and what's performing bad, and what all else, right?
And one other thing here, and it's not here. I believe all these sales are domestic sales, but if they were selling internationally and they were in multiple markets on Amazon, you could actually use a second tracking category in Zero to track by country, because you want to see what your sales are, what your costs are, and explicitly look at what your costs are, whether it's advertising costs to generate the sales that you're not making, and in some cases thinking, okay, it's time to cut bait on that country and focus, let's say, on this other country where you are seeing return on your ad spend. So,
right, and that can be so important, because if you're just spending money, especially if you're a U.S. entity who's like expanding globally, like if you're just spending money in global markets, but you're not really evaluating how you're doing, like it could just be, you could just be throwing money away basically. And so it's so important to be able to do that and to do that effectively. And you can see that also in this income statement, we have a lot of other different kinds of expenses as well. And so, um, and so they're here, they're listed out, they're very, very clear. Um,
I just want you to notice that we do have depreciation expense every month, every year. And when we look at the balance sheet, they're static. There's nothing for the last 2 years in accumulated depreciation. So I'm really curious where that got booked.
Yeah, it sounds like you generated a really interesting set of financial statements here.
For sure.
Yeah, and so Jay's transitioned here from the income statement to the balance sheet. And so you may recall from previous conversations that we've had, an income statement is a summary of activity over time. A balance sheet is a snapshot at a point in time. And so this balance sheet, you can see that it breaks into three main categories. Really, I guess I would call it two like super high level categories, and those are two categories that will equal each other. That's your assets, and then your liabilities and equity. And then your assets are broken down into current assets and then non-current assets, and then the same for your liabilities, and then your equity is separately presented typically. And you can see that that's happened here. And so we've talked a lot about a lot of different ratios that matter here. Working capital, quick ratios, all of those types of ratios consider current assets and current liabilities to give you an idea of whether or not this business is going to be able to pay its debts quickly. And you can see that the current assets for this company, that's there on row 17, they had $2 million in current assets in 22, and a little bit less, about $500,000 less in 23, and they only had what is that, 600,000 and 800,000 in liabilities.
Yeah.
So their overall ratios are slightly deteriorating, right? The working capital number got worse, but at the same time, they still can significantly cover their payables with their current assets. Now, assets break down into lots of different categories. The first is cash and cash equivalents. You can see those there at the top. And so this company has had about $250,000 in cash at the end of 2023, and then assets of a different quality in their AR. So they have 640 something thousand of AR, and then inventory, and also inventory in transit in 2023. So inventory is typically inventory that's here already. They already know where it is. And inventory in transit is inventory that's maybe on the water. Maybe it's going from one warehouse to another. Maybe their shipping terms are FOB destination, and they've shipped some goods out, but they haven't arrived where they need to go. And so they have a significant amount of inventory that's not like housed in their warehouse currently. And so I think that that's a very interesting thing to see here, because this entity has a lot of inventory on the move. Now, one thing that becomes really important here is both their AR turns and their inventory turns. And so this company, in 2022, their AR turns were their days in AR, like their AR turns were 1/12, whatever that is. They basically flip their AR once a month. And you can see that there in column I. Jay's done the calculation there. It's about 29 days. And so what that means, right, is that this company, when they invoice somebody, they typically get that payment on that invoice in about 30 days, right? Now, one of the things that we've talked about previously about how important it is to be monitoring this is that if your typical payment terms are 30 days, then that's right in line. That's exactly what you'd expect. But if your typical payment days are like 10 and you're at 30, or 30 and you're at 45, which is what their 2023 number looks like, then maybe you're starting to have some collection, some stagnation in that AR. And maybe you need to do a little bit more collection efforts, a little bit more calling around on what's going on there, to make sure that you're collecting your AR more timely. Now, one of the interesting things that's happened with this particular entity is that their AP days, you can see those down on row 31, like their AP days have also increased significantly. And so maybe as this company saw their AR collections like challenged, they decided, well, no one's paying us. We're not going to pay our vendors quite as fast either. And so you can see that they've let their AP age a little bit longer. Now that also may have to do a lot with their cash position. This company may be looking to turn that inventory and to turn that AR into cash before they actually make payments, because you can see they had at the end of the year they had about 600,000 in AP, but only 200,000 in cash. And so, if all of that AP is due now, which surely it's not, but if all of that AP were due now, they wouldn't quite be able to make it just on cash alone. They need to sell a little bit of inventory or collect on a little bit of AR. And so that becomes an important evaluation of like what the financial position of this company is. And so those ratios, and this is a prime example of it, those ratios are a really good indicator of overall company health. One other one, as Jay scrolls down right past it, was the inventory turns, and you can actually see that this company, despite their overall sales decrease in 2023, actually had a better turn rate. And so the 600,000, or what is it, the 700 and 800, almost 800,000, or a little more than 800,000 in inventory. That's effectively eight flips of inventory in the year. So they're selling through their inventory basically once a month and a half. And so when you think about that, right, when you think about your inventory is flipping in a month and a half, that really resonates back to the conversation that we had about tropical storms and in broken bridges, because that means that in a month and a half, all of their inventory is going to be gone. And so if they don't have the ability and capacity to be able to get inventory quickly, they're going to have significant problems in fulfilling the sales that they're making to their customers. And so that inventory turn number is a really, really good indicator of how much exposure you have to those types of problems, because you need that flexibility to be able to replenish your inventory when you can and when you need to. On the asset side, like Jay mentioned, like we've got something really unusual going on in this particular entity's fixed assets, because they've bought a few, right? They have it. You can see an increase in furniture and fixtures. You can see an increase in computer equipment, but what you don't see is the corresponding increase that associates itself with the depreciation that the company's had, which as an accountant is a very good opportunity for you if you were looking at these companies and potentially wanting to propose and give them a quote on assisting them with their financial stuff. Like, that's a good opportunity to be able to say, hey, you know what I really noticed here? You have a problem. Now, I don't know exactly what the problem is, and I don't know where the problem is showing itself, but there's a problem, because your fixed assets are depreciating. They very clearly are, but at the same time, you're not accumulating that depreciation the way that you should on your balance sheet. And so whoever the owner of this company is has some kind of problem related to their fixed assets. Interestingly, they bought $25,000 worth of office furniture or office equipment, and so I'd be interested in what this company does. And I will use that to note that this picture is just an income statement and a balance sheet, and without another couple pieces of information, it only gives you a little bit of insight into the entity. And so if you were truly looking at financial statements, one of the things that you'd want here and that you'd want to know a little bit more about is you'd want the notes to the financial statements. What those notes provide you are a summary of exactly that. They give you so much more information related to what the assets are and where they're going and what the company does. Because without having that information, you're kind of running blind. Like, we don't know enough about this business to know whether or not they're really doing well or not, because they're just we just have some very, very high level data, um, and we don't really know how to advise them without understanding what they actually do. Um, Jay's pulled the financial statements down, right? But there's one other thing that we'd want to point out, and that's typically the liability section. We don't need to go back to them, Jay. It's not that important.
Okay.
But your liabilities come in two main types. That's your AP, or like short-term liabilities, the things you need to pay right away, and then things like loans, like those loans, notes, lines of credit, like all that kind of stuff. Those are ways that your business is financed, right? And so you can see that here. This company has basically no outside funding from that perspective. There's no loans. There's no other stuff. They do have some withholdings that they've called long-term liabilities, but I think there's a good chance that's not true, because long-term in this sense are typically things that are due after an operating cycle, which is typically a year.
Yeah, they are probably misclassified. They should probably be up in the current liabilities. And then there are some working capital lines, the Clearco loan and the PayPal working capital. So those are lines of credit that they're paying down. Yeah.
Right.
They do have a couple credit cards that are out there. And that's about it. But the one thing I want to call out there is when you're looking at liabilities and you see a negative in there. So looking at sales tax liability for 22, they have a negative 6372. That's a debit. So they've actually either paid too much or they have something misclassified in there. So those are things you want to look at as well, make sure that's correct.
Yeah, and so like Jay's talking about, these become immediate opportunities as an accounting advisor to be able to say, that's wrong. And let me use my skills and my expertise to be able to help you to fix this, right? And so there's a variety of those, right? Anytime you see these negatives, they have the same thing within this withholding category. So there's some opportunity for improvement in these financials. One last thing that you can see here, right, is the equity section. That's the final section that we'd look at. You can actually see that they got a little bit of funding this year, and you can see that because their additional paid-in capital has increased. Their current year earnings, those amounts, that retained earnings number, those should all kind of agree to prior, like to the actual income statement itself. You should be able to match those pretty comfortably. But we do have something that sometimes could end up weird. But they've got distributions, right? And anytime you have additional paid-in capital and distributions, that's going to perk my interest a little bit. Because additional paid-in capital is typically an indicator of some kind of stock, and a distribution is typically an indicator of some type of partnership. And so I wonder if these shareholder distributions are actually dividends, or if there's something else.
It's an S corp, so it's a distribution.
Oh, okay.
Yeah.
Is that what they're called for S corps, Jay? I'm
really
embarrassed
sure
is. For everybody. Oh my gosh.
Yeah.
Bummer.
And the important thing to realize when you're looking at distributions for an S corp owner, and you notice when you're looking at the distribution lines, they are negative, and you look at your total equity, you need to maintain basis in your S corp, and if you don't, these distributions are taxable at a capital gains rate. And what basis is, it's the money you have in that company. So in this case, they put in $200,000 this year. So that increased their basis $200,000. And when you look at the change in equity, you also rolled into that the $20,000 of profit they made, and we take out the distribution. So this is what retained earnings is today. It won't always be your basis, but it's usually fairly close. when this gets closer to 0 or negative, you've got to really pay attention to that number, because your basis is maintained on the tax return, and there's some things that are on the tax return that are not on your financial statements, and some things on the financials that are not on the tax return. So, it's really important that you pay attention to that.
That, Jay, is definitely a conversation for another time. The temporary and permanent differences between financial statements and your tax returns. So obviously, I've talked a lot today. I hope everybody has gained a little bit of insight into financial statements and kind of how much I care about them. I could probably talk about this basic set of financial statements for another hour if Jay would let me. But I'm sure that his family and his dinner plans wouldn't really like that. So
yeah, I don't know if you noticed, but my wife peeked in the door about 30 minutes ago.
I did not notice, but that's.
But really the other thing I wanted to point out here, though, is this is part of the story. And the other side that we probably want to be looking at is also a statement of cash flows to see how they're performing there as well. So, but this gives you a good idea. There's a number of KPIs here, and I built them off on the side of the balance sheet. But if you're building out a report, you would actually build out those KPIs separate. Maybe build a dashboard to monitor those and do that. So, just wanted to. I would think you could probably do those calculations right in Xero in line, and possibly do that in the reports themselves. So,
that would be amazing. So, big shout out to Xero today, obviously. So thanks for letting us use your product. I hope, like I said, I love financial statements and I love talking through them. And that's a really high level summary. So, Jay, obviously you're going to dinner tonight. What else are you doing this weekend? Anything exciting? Anything to look forward to between now and next week?
Yes. So the wife and daughter just got home. They were up in St. Augustine for orientation for college. And we are heading to my daughter Abigail's final dance competition, her final of her dance career. And we're heading over Sunday. It's right here in Orlando. So we'll be spending 5 nights over there at a hotel. And I'll be working there, might be working home, might drive home. But she's got to be over there because she's got a bunch of early mornings. So, you were talking about what are we drinking. My wife has already keyed in some of the other parents that we have a bottle of 1800 that we're going to be bringing over.
Nice.
For them to partake, because I'm not drinking tequila these days, so and I don't think you've ever heard me say I drank tequila. So that's a story for another day. But
that is a story for another day.
Yeah. But I did tell some of my buddies I'm going to be bringing over a bottle of bourbon and some other whiskey as well, because the inflationary costs at the bar are a little prohibitive. So
inflation has hit Florida bars, you say?
Oh yes, especially at the resort hotels. But
I can imagine that's true.
And luckily, my daughter dances all of her dances on Wednesday, which means Thursday the 4th, I will be at the pool all day with my bottle and my cooler of Coke.
There you go.
So gonna be a fun week next week, and be working a couple of those days too. So it's gonna be a lot of fun.
Yeah, that's wonderful. Is there any output? Is this a special reward for your daughter, or is this like being the last? Is this the state level competition, or like whatever?
This is the national competition, and oh my God. She's got 8 dances that she's going to be dancing in, including 2 solos. And this is it. Leave it all out there because you're not going to do it again. Yeah.
Oh my gosh. Well, that's bittersweet, I'm sure. Like I understand, like it's exciting from like being able to continue to be involved in your daughter's life, but it's the last chance, right? So I hear all that.
And your days are coming here.
I know.
Yep.
Probably soon. It was splash day today, so my daughter got to go play around in the water this morning at the daycare center. But it's daddy-daughter night. My wife is going out tonight with one of her friends to do rock climbing. So not like
fun.
yeah, and then they're going to go to dinner after. So I'm on all nighttime duties. So that should be good
Yeah.
fun. And
Awesome.
then this weekend, right now at least, we don't have too many plans. But just like you, Jay, as it comes to the fourth, my wife's family is having a family reunion next week, and so we're doing some traveling. We're going to go hang out with her family and spend some time, probably having a beer or two,
There
and
you go.
enjoying just fellowshipping as much as we can, I'm sure.
Yeah.
So thank you everyone out there for paying attention, for taking a watch. We really enjoy talking about all kinds of accounting related stuff and the news, as well as me personally. I enjoy drinking beer, so big fan of that.
Yes, you do.
Yes, I do.
Well,
We will not see you next week, I'm sure, as Jay mentioned. The fourth is on Thursday. The fifth is a holiday for our firm, and you should use it too if you can't. Like if you're not already, you should take that extra day to take a breather. And we'll see you in 2 weeks'
2 weeks.
time.
Yes.
2 weeks' time. So again, thank you all for participating and watching us talk about financial information. Let's go. Have a great weekend and have a great fourth.
Happy 4th, everybody. We will catch you in 2 weeks.